All right, so I presume we can all view the screen, and therefore we can just go through the questions and see where we would have done better. Okay. Meanwhile, before I give my views, anyone has any question regarding the feedback I gave you for that mock? Yes, any question regarding the mock feedback I gave, or everything was fine? I proceed.
On my side, everything was fine, just waiting to see why I did not approach it correctly.
Okay. Raymond?
Also, on my side, everything was fine. I'm waiting test to see also.
Okay. Florence? All right, okay. So the question one, it wanted us to discuss the potential impact which this choice in accounting policy will have on investors' analysis of Mulco's financial statements for the year ended 31st December 2x7. Referring to key financial ratios shall earn you bonus marks. Okay, someone. So, one, potential impact on what? On investors' analysis. That is important. And these are questions that you're going to meet in question 4. You won't run away from them, where you will look at investor focus. How, in our introduction we said, here we look at how the financial statements that you present to the users are going to influence their decisions, either to invest or to divest in and from the company. So this question, it wants us to assess the available accounting policies. Of course, we consider their accounting policies in the scenario. And so, what is going to be the influence of choosing one of them over the other on the investor decision? And when you read through, they say that Mulco, a public limited entity that designs and manufactures plastic disposables, has a reporting date and prepares its financial statements in accordance with IFRS. Mulco purchased 5 investment properties. This was important. They purchased 5 investment properties. However, the directors hold concerns about the accounting for the properties in accordance with IAS 40. Meaning that even our discussion is going to be in line with IAS 40. How the investment properties should be treated. And if they are treated in that way, how will that treatment influence the decisions of the investors? As a result of raising property prices, of course this one here, raising property prices, Morocco purchased five buildings during the current period in order to benefit from further capital appreciation. You see, the fact that they bought them for capital appreciation, therefore they qualify to be under IAS 40. Morocco has never owned an investment property. Who can tell us, why do you think we are given that statement?
To decide on how to value their investment property, or that use cost of fair value method.
Yes, because remember the standard says if you choose a model, you should use it. So they're telling that now you see Morocco has never decided on the model to use. So it is the high time they choose a model on how to treat their investment property. That was all. In accordance with IAS 40 investment property, the directors are aware that they can measure the building using either fair value or cost model. Repeating this information could not earn you a mark because the investors are already aware of the two models. The directors are already aware of the two models, that is the fair value model or the cost model. Meaning that for you in your discussion here, you should discuss the two models, cost model and fair value model. As I tell you, the scenarios always have the answers. It is upon you to read and dissect the scenario. However, they are concerned about the impact that this choice will have on the investor analysis of Morocco's financial performance. They even tell you, they even give you the financial statements that you must talk about. How many of you saw this? Financial performance, position, they even told you what you should discuss, and cash flows. You see? They gave you what you should discuss because they said on Morocco's financial statements. So someone who could not remember the three financial statements, at least they were given in the scenario. And so you had to discuss each of them in your answers. There's one person who tried it. Is it Joseph who discussed the two financials?
Oh yes, Ivan.
So that was good observation of you, because they gave them in the scenario, so you had to discuss those financials.
Thanks.
The financial statements. Okay. If you can look at this question, the truth is, it is not a mag-up question. It is rather an application question. So, it required you to assess what you should write, then you start writing. That is the nature of question 4 that you're going to meet. Now, since they are telling you that Morocco has never owned an investment property before, here they are telling you that, please, can you also suggest the initial measurement? Because you cannot go to subsequent measurement before initially recognizing the assets. So this was basically for a hint. This is hint to discuss initial measurement of the properties. Initial measurement of the properties. So you have to pick it from there. That was a clear hint. And then after, okay, you discuss what each model gives, the basics we've been talking about. They have told you already there is fair value and where is it? Okay, so let me give you, how can I call it? Hints. So you discuss the initial measurement. I'm sure we all know that investment properties are initially measured at cost. Is that true?
Yes.
So you can say, can I go
Very
there,
true.
please? Or I say, what you should write about in your answer. Okay, then after, it is prudent that you show that you know what fair value model is and what cost model is. So discuss the subsequent measurement of investment property. That is, talk about cost model and fair value model. That is, what do I mean? Under cost model, you tell the examiner that under cost model, the initial cost of the investment property is subsequently subtracted, or you can say accumulated depreciation and impairment losses are subtracted from the initial cost of the investment properties. While under fair value model, the fair value of the asset is obtained at each reporting date. Are we getting it? My question is, do we charge depreciation under fair value model for IAS 40?
Of course not.
No. Someone was doing that, made that mistake. So under cost model, you get the cost of the asset, of the investment property, less accumulated depreciation and impairment losses. And then for fair value model, you say, we obtain the fair value of the asset at each reporting date. And we know that once it involves obtaining fair value, you should take the gains or losses to where? Where do you take those gains or losses? Yes?
P and L.
P and L. So those ones you should put them under your state. Then you come and discuss what the question said. You've talked about, I told you, under state, we talk about what we know about the standard. Then under application, we use what we've talked about under state to apply. Now, since the question wants us to assess the three financial statements, so you start with statement, then handle the impact of the choice on the three financial statements named, i.e. statement of financial position, statement of profit or loss and other comprehensive income, and statement of cash flows. Let me hope you all realize that this statement financial performance is showed by the statement of profit or loss. And then financial position is showed by the statement of financial position. And then the cash flows. So your answer had to be with three subheadings. Statement of financial position. Okay. Then you talk about if cost model is selected, what is going to happen? You told them already under your state that under cost model, we consider the cost less accumulated depreciation. Is that okay? So, if you take this model, it means that you're going to be reducing the value of the asset. Why? Because you're going to be depreciating the asset. Are we getting it? The value of the asset, or can say the carrying amount, stroke carrying amount of the asset is reduced by the accumulated depreciation. And you already talked about this, by the way, in the what? In your state part. I want to see, what do they use? What are these guys buying? They are buying buildings. Are you seeing it? So since they are buying buildings, it is better that we apply our information. So here you're going to say the carrying amount of the buildings. Don't say assets. You can even say Muluko's how can you can I want to bring in Muluko's. Okay, let me just leave it. I'll need to bring in the name of the what? Of the company. Value stroke carrying amount of the buildings is reduced by the accumulated depreciation. Okay, then you talk about if fair value model is selected, what is going to happen? You are going to be increasing the value of the what? You are going to be increasing the value of the asset. Why? Because the prices are rising, and therefore you're going to be recognizing, you see, the prices are rising, meaning that you're going to be recognizing fair value gains, which are going to increase the value of the buildings. I don't know if you're getting it. Gains are to be recognized due to increasing fair, okay, you can use this word, due to increasing or rising. I can't even take this, I can't even just take that, due to rising property prices. As such, the value of the buildings in the statement of financial position shall be increasing. Are we picking up something from my discussion?
Yes.
Yes, Ivan.
Yes, please.
Yes. Of course, since we're trying to look at investor analysis
Yes, please.
in terms of maybe better presentation or better results of the performance of the company, after doing all this narration and all that, are we able to maybe recommend from the investor perspective that okay, maybe they can maybe guide and use fair value because it will recognize those fair valuation increases since the property price is actually increasing. We may see a better performance at the end of the year. Unlike sticking to the
you see,
yes.
the trick is as a technical person, when you're advising someone, okay, you never make a conclusion for them. You never make a conclusion for them. What you do for, you just discuss the pros and the cons. Then for them they make the what? The decision. Does it make sense?
Okay.
Even,
yes, it does. It does.
even in your answers, never tell the directors that they should do this. We always try to avoid negative words or even advisory. Apart from under the ethics part, where we say the accountant or the finance director should maybe seek guidance from SCCA, you get it? But if someone has done something wrong in the question, never say the finance director is wrong. Please avoid negative words. Are you getting me? In your answers, you should say the treatment is inappropriate. You don't attack the person. Are we getting that trick, guys?
Yes.
So I think someone wrote about something is wrong. Don't use direct negative words. You just say the treatment is inappropriate, or it is better it is treated this way, so that you do not attack, if I can say. Anyways, that is my interpretation of SOFP. Then we go to, yes please. Yes, please.
Lastly,
Joseph.
Lastly, Ivan. Yes. I know with the standard financials, we have statement of financial position, statement of profit or loss. There's a traditional name of statement of financial position, balance sheet. Is it allowed? But if I say balance sheet, then I do that.
No. I think that is
They
USA.
don't.
And we are dealing with UK terms, so you use SOP.
Okay. Thank you.
You avoid income statement, avoid balance sheet in your answers.
Okay.
Yes, Patience.
I wanted to ask for the case of you said we do not recommend. Can't you maybe refer to the standard and say that okay, like when you say the directors made wrong entries, maybe you say according to the standard, maybe PP was supposed to be okay. I'm just giving an example: debited, then something credited, something like that. Is that recommended?
You see, depending on the question. Depending on the question. If they say advice, okay, there they are asking for guidance, not so. But for discuss is open. And you see how you phrase your answers all goes back to how you interpret the question. You saying that according to IAS 16, okay, maybe I don't know how I can give an example that ends up indirectly giving advice, but when you are not directly showing that you're telling someone to do something. Are you getting it? Is there a difference? You can give someone advice indirectly without saying that you should do this.
Okay.
Yes, and the truth is you can only gain the skill to answer a question as it is asked through practice, because you're going to be exposed to different approaches, and it will just automatically be flowing how you'll be presenting your answers.
Okay. Thank you.
We can only generate the confidence and the art of drafting an answer depending on the question through practice. And you see that each question will have a different approach. Okay, so who can discuss for me statement of profit or loss? Statement of profit or loss. Remember, I'm not giving you the final answers. I'm just trying to discuss for you so that you know what you would have put down. Okay, if cost model is selected, is selected, what is going to happen? You talked about it up here. Where? Here. In your discussion about cost model, what goes to statement of profit or loss?
Depreciation of the year.
Depreciation is going to be there. If depreciation is there, how is it going to impact? Okay? How is it going to impact on the profits?
It reduces.
Perfect. So here you discuss about depreciation, okay, charged to P&L, reducing the reported profits. How about if fair value model is selected? Under discussion here, what did you talk about fair value that goes to profit or loss?
Again on revaluation.
Don't talk about revaluation, please. I told you I warned you about it. Under IAS 40, don't talk about revaluation. Just talk about gains or the fair value gains. You get it? Okay. So here we talked about gains increasing. Now you see how they get people who cram. Someone's going to say gains or losses. Who can tell me why is this wrong? Who can tell me?
Because, hello,
Yes, please.
they clearly told us that the property prices are rising, so meaning we shall have gains.
That is
Consistent.
application. That is application. If you talk about losses, you are totally off because it is not in the scenario. That's why I always tell students, don't go with answers in the exam. Just go with your basics. Then you'll find the answers in the exam. I hope that is clear. Okay, so this is totally wrong. Gains increasing. And if they increase, of course you can say gains charged to, you can say gains credited to profit or loss increasing. Hence what? Hence increasing reported profits. Is that okay?
Yes.
Okay, you can even include other discussions. I'm just trying to show you where you would have scored the marks. Okay, what is remaining? Cash flows. Under your state, guys, you see, under your state. Okay, let me take you there. Under your state, here, under your state here, did you talk about anything under cost model that involves real cash?
No.
Did you talk about anything under fair value model that involves real cash?
No.
Under cash flows, what do we talk about?
No impact on the cash flow since all the others are non-cash flow elements.
Perfect.
The movements.
Perfect. No impact by the two models. Who's this? Yes, Raymond.
But I thought under the cash flow method, when you're making those adjustments, according to what I remember in FR, we do what, we add back the depreciation. So doesn't it affect that cash flow statement?
Not really. The question is, okay, for you are using, is it the direct method or indirect method? Let me first discuss this. We have three cash flows, right? Let me challenge you from that angle. We have three cash flows. The first one is Raymond,
cash flow from operating activity.
operating activities. Another one,
Investing and financing.
investing activities. The other one is
Financing.
activities. So Raymond, where do we have anything that depreciation affect? Is it investing? Anyways, to sum it all, Raymond, there is no impact by the two models on the cash flows. That is it. Okay, any question regarding question 1, or I proceed? You can go in your free time, you try to phrase and draft your answers. Any question regarding that, or I continue? Please respond. Anyone? Any query?
None from me.
Maybe they talked about, you guys have failed to ask. They've talked about referring to key financial ratios should earn you bonus marks. What are those ratios that you would have talked about under statement of financial position? Yes?
Return on total assets.
The return on
Total assets.
total assets.
Yes, return on assets.
Return on assets, okay. What else? You see, we are looking at investor ratios. Okay? Investor ratios. And trust me, if you cover, is it IFM or financial ratios under SBR and FR, you'll find that the key ratio that investors are interested in is the gearing ratio. Is that true?
Yeah, okay, Ivan.
Yes, please.
Yeah, what about return on capital employed?
Return on capital
Employed.
Return on capital employed. How does it come in with assets? What is the formula?
Yeah, that is total assets.
There is
The profits.
the profits.
Yeah, net profits.
And you're
The,
discussing statement of financial position.
okay, I'm sorry.
Okay. So guys, here you can discuss about the gearing ratio. I hope we all know what gearing ratio is. What is the formula? Yes, what is the formula for gearing ratio?
Debt over equity plus debt.
Debt over equity plus debt. Okay. But there's also another one. That is one. There's another one.
Debt over capital employed.
Okay. We shall get that one during our individual revisions. Under statement of profit or loss, which key ratios can you discuss about? that investors are interested in and directly impacted by the assets. Yes? Okay, that is your homework. I will not really give everything. That's your homework. Let us discuss question 2. Question 2. In accordance with IAS 23 borrowing costs and IAS 38 intangible assets. You see? In accordance with IAS 23 borrowing costs, they're even telling you what to do. And IAS 38 intangible assets, they're telling you what you expect in the scenario. Advise directors of Miracle on how the borrowing costs. You see now here, advise. You're going to see that even the phrasing of the answers will somehow be geared to that direction. How they are to treat the borrowing costs and the research and development expenditure in the year ended 31st May to X6. Guys, I'm not discussing question Roman number 1. Who can tell me why? Who can tell me why I'm not discussing it?
Because we discussed a similar question when we are doing borrowing costs.
It is the same question, in fact. I just changed the figures and then the name, but people still couldn't get it. So, Joseph.
Yes, Ivan.
Can you give me assurance that you can pass a number we've done here and then you find in the exam?
Yes.
And I think
I can surely kill
is
it.
it only you who passed it? Who passed this question?
I see ticks throughout.
Yes? Others could not remember. So I'm not discussing that part. Please go back. If you missed that lecture, you can watch the recording is uploaded and see how we approached it. Roman number 2 was so direct. I think we had already discussed this. Very direct. They have incurred 1 million of research expenditure. Very direct. What do we do with this one?
We expense it right away.
Yeah, so you just say directors should expense this much
To P&L.
no loss. Perfect. To develop a new. But of course, you shouldn't forget our state part, right?
Sure.
State, then after, apply, conclude, finish. Additionally, it incurred 0.5 million of... How about this? What do we do with it?
We capitalize.
Perfect. So this was also an easy part, right? That was also an easy part. Okay, question 3. Unless anyone wants me to discuss this question here. Anyone with a query on question 2? Patience, do you have any query on question 2?
No, I'm good.
Raymond?
No, it's okay.
How about Florence?
It's okay.
No, please you ask if something is confusing, but for me I find it was very easy. It was so direct, and I think most of you passed it, apart from Florence, who made a mistake of writing non-qualifying asset. Do we have that in the standard, Florence? Florence, do we have anything like non-qualifying asset in the standard?
No.
Okay. Now we have question 3. This is where most of us, of course, franked, but there's, I think, one person who tried to figure out what it exactly needed. Discuss with suitable calculations. Once you see this, once you see that, know that you can't survive Excel. Otherwise, you can also write your calculations in the word processor, but they want you to do some calculations at least. Whether AMULCO should recognize an impairment loss for the mines. These are free marks. Once we talk about impairment, first discuss what impairment loss is. Then talk about how do we get, because we've talked about fair value, carrying amount versus recoverable amount. Talk about how do we get recoverable amount. And if you're getting it, the higher of fair value less cost to sell and value in use. But when you read the scenario, you'll see that these guys were trying to show you that you must calculate the recoverable amount using value in use, because they've talked about present value. And you know that how do we get present value? I mean, how do we get value in use? It is the present value of the future cash flows, both inflows and outflows. So this information here was to help you work out the recoverable amount using value in use, because these are going to continue using the what? The mines until when they decommission them. So maybe I just have to go through and show you where a few things were, and okay. AMULCO is a mining company. Investors in AMULCO receive earnings from the mining projects as a return for their investment. Okay, the year ended is that at 31st that AMULCO owns mines which have a carrying amount. They've even given the carrying amount, so your application becomes easy because you're going to compare. You're going to compare what? The carrying amount. But now before talking about this, let us see what other information is in here. Okay? Why? Because this carrying amount has what we call a decommissioning cost that we are likely to remove from this value. Okay. The company has committed itself to decommissioning its mines at the end of their useful life, 5 years or less, and has created a decommissioning provision of 53 million. Okay. However, the directors are unsure how the decommissioning provision will impact on the impairment testing of the mines. Here, guys, this is what I told you. These guys, they were not sure. They were not sure of how they should treat the decommissioning provision when testing for impairment. What we should know is we have to get the value in use, okay, which is going to be the carrying. Wait, we are going to get this decommissioning provision has to be reduced on the carrying amount of the asset, and it should also be reduced from the value in use that we are going to calculate using the present values of the future cash flows given. So this is a one-off question that if you do not do so much practice, trust me, you cannot get. But the trick was when you are obtaining, like for assets where we incur decommissioning costs. Okay, when you want to test for impairment, you must remove that value from both the value in use and also the carrying amount. Why? Because that money is going to be spent at the end of the period. So it does not impact on the assessment for impairment. Is that clear, or I need to explain more?
It's not very clear.
It is very clear. Let us proceed. At the end of the
Did not.
yes,
It's
please.
not very clear.
It is not very clear.
Did not. Yes, I said not.
Okay, I've said that this was a specific question. Okay, and when it comes to assessing for impairment, the decommissioning costs must be removed from the recoverable amount of the asset, and also must be removed from the carrying amount of the asset. Why are we removing them when we are assessing for impairment? These are costs that are going to be incurred. They are going to be spent. Okay? So at this point, when we are assessing, when we are comparing the carrying amount and the recoverable amount, remember within the carrying amount, there is a provision embedded, but this is not our money, because at the end of it all, we are going to spend it. So we have to remove the corporate veil, or we can call it the asset veil, so that we reduce the carrying amount of the asset to the actual value, not including the provision. And also for the recoverable amount, the fair value less cost to sell or the value in use, we must also remove that part that is attributed to what we are going to spend at the end of the asset, so that we can compare like to like, as in the actual value of the asset vis-a-vis the recoverable amount actual of the asset. Does that make sense? Do I need to write something here? When assessing impairment of an asset that includes provision for decommissioning costs, these should be removed. Stroke deducted from the carrying amount and the recoverable amount to allow comparison of like to like. You're going to find that someone who didn't remove, they got the same answer. I think, who was that person who got 25? But that is now out of, yes, you applied the knowledge, but you didn't apply the concept. Comparison, to allow comparison, okay, comparison of like to like, true value of the asset. Is that okay with everyone? Why is this disturbing me? Okay. Okay. Any question regarding that, or I just proceed? Because it is clear. It is a concept that we've just learned, that when you are assessing impairment of an asset that includes provision for decommissioning costs, those are subtracted from the carrying amount, and also the recoverable amount.
I think for me, I just have a request. If you could please draft for us the answer for that. Even if it's not, when it's not now, like later on, you get the answer for that.
No, I'm going to give you the calculation. The state part, you know, right?
Yes.
The state part, you know. The calculation is very easy. Let me show you. The calculation is very easy. But I think I'll find time and draft a full answer. Okay. We have said with this known, of course you have to just write this in your state part. And then you say carrying amount of the mines. Okay. What do we have? We have $200, 200 million. Not so? Then you less decommissioning. What did they call them? Decommissioning? Yes. Decommissioning provision. I can just even use the term that they used here. Carrying amount. Just say less carrying amount of decommissioning provision. 50 what? $53 million. So this gives you dollar. What is 200 minus 57? 147. Sorry, 147 million. But remember, under your state part, you said that we compare recoverable amount and carrying amount. And then you said recoverable amount is the higher of value in use and fair value less cost to sell. But in this question, they didn't tell you anything about fair value. Is it there? No. Now you have to apply the concept of value in use. Then you say value is in use is obtained as the present value of future cash flows. That is under your state, and you're giving facts about the standard. So if you find value in use as the present value of future cash flows, and these future cash flows means cash inflows less cash outflows. Are we getting it? As simple as that. Okay. So they have told us what are the future cash inflows. They are even telling you these are inflows. See how the examiner was very lenient? This is an inflow. And what you already stated was clear. Present value of future cash flows. And from your FR knowledge, these are as simple as that. Okay, so then you come and talk about value in use. I will repeat, you already defined how you get value in use. Present value of future cash flows. You start with cash inflows, you remove cash outflows. So, sale of reusable components at decommission date, that you are going to sell some reusable components. So, you're going to get some money. Are we getting it? You are going to get some money. Okay, so we say here, sale of reusable components. How much is it? 20 million. Of course, you shouldn't do this in the exam. Please don't embarrass the examiner. Once you're dealing in money, you should do this. Just the way the examiner presented his work, also do that. Even up there, you should do the same. What is the other cash inflow? They even put for you sale of mining output from 31st December 2007 to decommission date. These are all present values of those future cash flows. Okay. In fact, for you, what you can do, you can even specify that you're using present values. Here you call it present values. Okay. Selling output. Even if I don't put all this, it is already clear. No one is going to penalize you. So this is 203. But now you less, okay? You less the present value of the future cash outflows. Operating costs from this to that. Since these are costs you're going to be spending. So you come and put it here. These are how much? How much? 48. In fact, you should do this, please. You should write your answers in. Okay. Then here also, this is 48. But you said that in your state part, you already wrote this. In your state part, you already wrote that. So you shouldn't forget it. You also less decommissioning, or you can call it present value, or carrying amount. Okay, call it carrying amount of decommissioning provision. And how much is it? It is 53. So you've got, we've said here, it is the present value of future cash flows. And this is the same as cash inflows minus cash outflows. That's what we've been meaning by the present value of future cash flows. That's what we mean. So you find that, then I'm sure this is get my calculator. This is 20 plus 203 minus 48 minus 53. This is 122. This is 122. 122. But under your state, you said you compare carrying amount 147 and recoverable amount 122. So you say that since the carrying amount $147 million is higher than the recoverable amount $122 million, then the mines are impaired. As such, what was the question? Discuss calculations whether should recognize. So we are going to conclude by saying there are, as such, AMURCO. So we're going to get that, pick that, take it down here. As such, AMURCO should recognize an impairment loss of bracket 147 $147 minus, okay, this is million, minus $122 million, which is
25.
I know someone got it. 25 million for the mines. And that would be your conclusion. But I've told you, don't forget to talk about it, to write something under state, defining impairment loss, how to get recoverable amount. And why are you defining recoverable amount? Because you must talk about value in use. Why? The information provided is about value in use. Any question regarding this, or everything is okay? Hello guys, anything about this, or we are good to go? Michael,
Yes, sir.
are you fine?
I'm okay, but I'm following.
That's nice. How about Florence? Is everything okay?
Yes, Ivan.
Patience, any question?
None from my end.
None from your end. Okay, whom should I ask? Raymond, are we okay?
Yes, we are.
Okay, so meaning that we've successfully discussed our mock, and so now we can go through the basics of ethics. We see how we should approach ethics questions, and then we try a question before calling it a night. Have we all watched the ethics video? How many of us have watched it already?
I have.
Okay. Patience, have you covered ethics before?
Yes, I have.
How about Mukama Joseph?
Yes,
Is it new?
you mean the normal class, eh?
We can't hear you, Joseph. Raymond, for you finished. Yes, Joseph? Okay. I'm going to presume that we've all covered ethics. So we can go ahead and do a simple review.
You can now hear me?
Yes, please. Joseph? I think Joseph has network issues. Okay. So I'm going to start with a question. What is ethics to you? Not bookish stuff, but as a person, what do you think being ethical mean? Raymond, what is ethics to you?
Being ethical, I feel like, is acting in the most appropriate way in order to cater for all. Let's say if I'm doing something like, let's say, making tables, or sorry, okay, let's say, okay, doing something in an appropriate way so that people that are going to use what I'm doing are not affected in one way or the other.
Okay, that is your view. Doing something in a way that does not cause harm to another person. Okay, Florence, what do you think ethics is all about?
To me, ethics is More like the guidelines that I follow, the way I conduct myself. Yeah.
Conduct yourself. Patience.
I'll say that ethics is, it looks more into doing what's right.
Okay.
Yeah.
Okay. Doing what is right. Joseph.
Yes, yes, Ivan.
What is ethics according to you?
Ethics is doing something that is morally right or acceptable to society morally. It may not be by law, it's not written anywhere that you have to follow this, but then that moral kind of thing. If, for example, maybe when someone dies in society, you go for burial. If you don't go for burial, no one is going to say that this, no one is going to take you to court or prison that this guy didn't attend burial. So morally, it's not right for you not to do it.
Okay.
Yeah, something like that.
Perfect. So, what do you think? You've talked about something like something acceptable in society. That is very important. That you should do something that is within the ambits of the society. Otherwise, you end up being an outcast. And it is on very many occasions we always face those challenges or dilemmas that put you in a fix. Should you go and attend a burial, or you stay in office and write the management reports? Okay. Should you stick to the guidelines of an accounting standard, or you fall through and accept the pressures of your boss, who might not be ACCA? And moreover, you know, this world is, we call it a world of two opposites. We always have the right and the wrong. But what is good with our IFRS that we study, it is more of principle based. That while you are interpreting situations, what is fair enough, or what is appropriate to be done so that it is accepted in society, or it does not harm a user of the financial statements. And in fact, the fact that it's not easy to have one uniforming set of behaviors without having guidelines. As Joseph said, it might not be written. But for us accountants, we are lucky that we have a code of ethics that explains or guides us in the way we do our things. In fact, at one point in time, when you feel challenged, you can fall back to the code of ethics and see, what does it require me to do to be an ethical accountant? If I take this decision, will I be ethical enough? Won't I be influencing the decision of the user of the financial statements in a wrong direction? So, under ethics, we basically look at the principles that the IESBA Code of Ethics provides. And indeed, these must be followed, not only by me, who is an affiliate, but also you, a student, who is trying to pursue the qualification. So for you can't say that, okay, I will do whatever I want because I'm just still a student. No, the code of ethics binds the students, the affiliates, and the members of the profession. So, since we have all covered this, what are the basic principles of ethics as per the IESBA Code of Ethics? Who can give them to me? I know we've all covered principles. Okay, I can say fundamental principles of ethics. Fundamental principles of ethics as per IESBA Code of Ethics. And by the way, in our advisory, we should always mention the accountant should follow the basic principles of ethics as per the IESBA Code of Ethics. So who can give me one of these fundamentals?
Objectivity.
Yes. We should be objective in whatever we do as accountants. So what does it mean? Whoever gave it to me, what does being objective mean? Yes, Joseph.
Yes, objectivity is being straightforward in all we do professionally.
Don't you think you're mixing it with the integrity? You see, what is the opposite of being objective? It is being subjective, not so? So this is being without bias. Without bias or undue influence. That whatever you do, you remain to what is right. So, at a given point where your boss forces you to do something against the standard that you already know, if you accept, then you have lost your objectivity. Because you are acting under undue influence. However, if you manipulate financial statements, because you want to report a higher profit figure, then there is a conflict of interest. And therefore, whatever you are doing is out of subjective decisions. You are not objective at all. Is that clear to everyone?
Yes.
Okay. Any other principle known to us? Any other principle known to us?
Confidentiality.
Who is this person? When I want to mute them, they unmute. When I go away, they... Confidentiality. Yes. What does it mean? The principle of confidentiality.
It's like sort of being private, like do not disclose the clients or customers' private information to the public.
Do not disclose private information. That is, we are going to, as accountants, okay, we have access to critical information. We have access to critical information. And this information might be giving competitive advantage to the company. So if you let it out, then you are going to cause harm to the company. Similarly, if we are to discuss something in the board meeting, maybe you are going to make an investment in a given company, and then you disclose that information to our competitor, and they go and buy that company. That would be lack of confidentiality. Yes, the other principle.
Something small.
Yes, please. Joseph?
Yes, you can hear me? Yes. Maybe I can add something small to confidentiality. I don't know,
Please.
maybe you can comment.
Please.
Yes, I may not be required to disclose private information without proper approvals. But then, where I think the disclosure is coming from the state or those with the higher authorities, maybe they will disclose even if they don't give us permission, the client.
That is great. You've just discussed which conditions or under what conditions you can disclose information. One, with approval from the other party. Then two, if it is required by law for you to disclose. Is that okay? Otherwise, you shouldn't disclose. That is a good one, Joseph. Okay, please. Since this is just revision, so we should all bring in our ideas. Any other principle?
Integrity.
Which one?
Integrity.
Integrity. What does it mean, Michael?
Yeah, being honest to yourself in whatever things that you are doing.
Be honest and straightforward. That whatever you do, be honest and always be straightforward. Otherwise, if you accept to do something and at the end of the day you don't do it with the expected level of performance, then you are not honest when accepting that assignment. Okay, which other principle do we know? You see what is funny with this ethics question? Knowing these principles is good, however their application is more important. And maybe their definitions can help you when you're explaining a point, as we are going to see following the technique. Remember, the answering technique for ethics question is quite different from the general paper attempt of state, apply, conclude. In ethics, we don't have that. State, apply, conclude doesn't work in ethics. Okay, which other principle?
Professional competence and due care.
Professional competence and due care. Why does it talk about patience? Professional competence and due care. What does it talk about?
It's more of like should I say like advancing your knowledge, more of like continued development of your knowledge in accounting, so that you can be able to give like maybe your clients a better, maybe should I say conclusion or something, like something in that line.
Perfect. Keep informed. Keep informed of the trends in the profession, and other overall knowledge, business knowledge, business knowledge. And you find that that's why we are required as accountants to always do the CPD's continuous professional development courses. And you can also engage in reading technical articles, as I've been showing you. I finished the course, but I keep reading technical articles. I keep attending business forums and seminars. So you are expected to know at least something that goes on in the world of finance and in the world of accountancy. Otherwise, if you show that, remember, accounting is like a human being. It keeps on evolving. You might be knowing a standard today, and then tomorrow a new standard comes up. So if you do not keep yourself in books or in the know of the changes in the world of finance, that means that what you know is going to become obsolete. And at the end of the day, you end up making decisions following all the standards that have been already replaced. The best example is, I think, I personally didn't study, is it IAS 27? The one for leases. Which standard is that that was replaced by IFRS 16? So, if you've not been reading information, you keep on applying the old leases, the old lease accounting. Yet now we are using IFRS 16, which gives totally different guidelines. So as an accountant, you're expected to keep informed of the changes within the profession. Then lastly, the other principle is professional behavior. Professional behavior. And what is professional behavior about? What is professional behavior about?
Acting in a way that is appropriate according to the profession you are in.
Perfect. You do not discredit the profession. You do not discredit the profession. Whatever you do, make sure that Tebiswaza, it doesn't bring shame to the profession. So, you must always follow the applicable laws and any regulation. So here I'm saying, follow applicable laws and regulations. Do not engage in anything that discredits the accountancy profession. So when I was a student, these principles, I gave them a mnemonic, PICO. So I'm going to arrange them in that order. So I'll get this, put it here, then I get this, put it there, then I get this. That's how I would be able to remember these principles. PICO, professional competence and due care, professional behavior, integrity, confidentiality. This should be single C, PICO. P-I-C, yeah. This should be double P. Okay, like that. For you can also come up with your own. So professional competence, professional behavior, integrity, confidentiality, objectivity. However, these are very important in attempting the question on ethics. But where there is objectivity and integrity, there are those threats to the principles of objectivity. And what are those principles? What are those threats? Threats to the principles. Anyone?
Self-interest.
Familiarity.
Yes, self-interest. Familiarity. Yes, please.
Self-review.
Self-review. Okay. Which other one?
Advocacy.
Intimidation.
Advocacy, intimidation. You're going to tell me what this means. There are these ones, right? 1, 2, 3, 4, 5. I use this SAFI. Self-interest, advocacy, and in audit and assurance, in AAA, you have M. Okay, SAFI. Should be single. SAFI. Okay, so what is self-interest about?
Like doing things in a way that favors you, the accountant.
With self-interest, if you're going to be a beneficiary of the outcome, okay, this one is being a beneficiary of the outcome. Of course, this can be financial interest, or it can be any other interest. Like financial interest, because if we report better profits, we shall get a bonus. That is self-interest, because you're going to benefit financially. Next, if he's given a job, our family will get more money. That is your brother. You're going to have interest in the decision, because at the end of the day, your brother is going to get a job. And therefore, such interest can influence your decision, that instead of being honest and straightforward, you are challenged and you end up being dishonest. Because you are going to be a beneficiary of the outcome, you exert undue influence on someone else. I'll give an example of a finance director. Because he wants to float his company in the share market, okay, what they do, they tell the accountant that, you know what, please cook the figures so that our statements look healthy. So they lose the principle of objectivity, because they are going to be the beneficiary of the outcome of their influence. Okay, what does advocacy mean?
Presenting maybe what's not right. Let me say maybe you promote a client's position by maybe doing earnings management. Maybe, okay, like let me say you do not give the right figures so that the client may look good or the employer may look good.
Okay, that's a good attempt. Anyone else? Yes, Raymond.
I feel like representing the client somewhere. For example, if a lawyer represents a client in court, then they're not a competent person, or they're not good for the person to go and meet their clients, because you're already in favor of the client. The client is already paying them, so they're going to pay the client.
Perfect. I'll use another example. You are a company accountant, and then you attend, okay, you are a company external auditor, then you attend a URA case and you want to defend that client. Or you are a company auditor and then you go with the client to the bank to be a support system for them to get a loan. That is advocacy. You want to show that this client is so good. So you go with them in the bank. You try to convince the bank to give them the what? The loan. That is trying to work on behalf of the client. Yet you are their accountant. Of course, that is advocacy threat. What is familiarity? Yes?
I feel like being overused to someone. Let's say you've worked with a person for a long period of time, or you have been close friends.
Long-term relationship. So that you can't even see the mistakes that someone is what? Is committing. And even if you are willing to talk to them about it, you do not. Because you have created that bond out of long-term relationship. These threats are very beautiful when we are discussing them here, but identifying them in the scenario is very important. Otherwise, you might end up calling a familiarity threat, you call it self-what? Self-interest. Okay, when it comes to self-review threat, what do we mean? Yes, self-review threat. Anyone wants to try?
I'm not really sure, but it's something like, let me say, you review your own work,
Okay,
something in that line.
that is true. With self-review, you see you cannot do something and then you beat the other party to criticize it. That becomes challenging. You cannot be objective in challenging your own work. So you are the accountant, and then at the end of the day, you want to challenge the misstatements in the financial statements. Even if you observe the misstatements, you will not bring them to the attention of management because you are the same person who prepared the work. And if you are an auditor, your colleague audited a company and didn't recognize a misstatement, can you go and review that auditor's work, you find a mistake, and then you bring it to the attention of the company management? Of course no. Why? It is human not to criticize or evaluate our own work or the work of our colleagues. Is that clear with everyone?
Yes.
So this is like evaluating own work or work of a colleague. How about intimidation? What is it all about?
Hang on.
Yes, please.
Okay, to me, I may not be right. Anyway, but let me just try.
Yes.
Hello?
Please.
Intimidation, okay, to me, okay, it is like being forced,
Being
okay, by your seniors
okay.
to do something against the profession.
Perfect. That is a good one, Michael. Being forced to do something against your own will. And of course, they will tell you that you either do this or you lose your job. That is intimidation. Yes, Raymond.
Yeah, I was inquiring, what if I say threatening, like someone tries to threaten you, if you don't do this, this happens, like that.
That is true. So we can talk about even threats. If you don't do this, even threats, you lose your job. That undue influence that is always given by people because of their positions. Because someone is above you, they tell you to do something, and then if you don't do it, they put a repercussion. So, using the basics about these threats and then the principles, we can be able to identify what has gone wrong in the scenario, and then we challenge it. All right, we all know that this question comes in section A, right? Section A, question 2, and it is between 5 to 10 marks, by the way. And these are free marks. In fact, when I was still a student, we were told and advised to start with question 2 because it gives you the confidence to approach other questions. So these are free 10 marks out of the 20 for question 2, and so we should practice so that we can earn them. All right, I will not go into the safeguards that are available. Okay, how can you safeguard yourself against these threats? Okay, and what are the consequences of failing to follow the fundamental principles? You know that maybe there can be fines, you can use your qualification, you can be imprisoned. Those are all consequences of failing to either be a person of integrity or known to be confidential with information, or accepting undue influence from people of position, or failing to perform the work at the expected competence as an accountant. So you can either end up paying money. In worst case scenarios, you can pay money and also be imprisoned. And if your professional body gets to know, you can even lose your qualification. So these are the things that we can talk about when it comes to the consequences of not being ethical in our work. When we talk about ethics, we can't fail talking about insider trading and what are the consequences or which principles are challenged if someone becomes part of insider trading. So my question is, what is insider trading? Yes?
I feel like can I just explain it?
Please.
I feel like it's an illegal practice, like of trading on the stock exchange when you have a greater advantage than the rest of the market.
Okay. Having information. Yes, Florence.
Insider trading, I feel like it having inside information of the company about shares before it's let out to the outside.
Okay. You are all right. It is having information that others do not have. As simple as that. Having information that the public does not have. And you having that information puts you in a position that can make a decision quicker or faster than others. Example can be you are a board of directors of one company, a member. You are a member on the board of directors. And then you realize that, okay, this company is performing so bad and they would like you to make losses in the next 5 years. But your wife is a shareholder of the company. Then you go and tell her, you know what? We are going to be making losses for the next 5 years and I doubt if we shall come back to normal. Please go and sell your what? Your shares. Or you tell her, the share prices are going to drop for our company. Go and sell off. And then after 1 week, the share price drops. So you provided information to someone that gave them an advantage over the others. And that information was not yet out to the public. So if I can ask you, what are the principles that insider trading breach?
Confidentiality.
Perfect. Confidentiality. Because you have failed to maintain the information, or you have used the information for your own benefit. Okay. What is important to know is you are not, or an employee has no limitation of investing in their own company. Is that okay? However, while you are allowed to make an investment in your company, your decision to invest should not be based on the secret information you have, but rather on the information that is right out to the public. Please take note. Don't look at a scenario where they tell you that information is out to the public. Someone has invested, and then you call it insider trading. An employee can invest in the company provided the decision is based on information that is widely available to others. So we shouldn't call anything insider trading. Yes, Raymond.
So now what if this is a question. What if the employee is aware that the shares are going to fall late in the next 1 week or 1 month, and they're like, for me, I cannot do this money. Let me sell off my shares. But the information is not yet out to the public. So how do we explain that?
That is insider trading because you have used the information secretly available for your own advantage.
Thank you.
You're welcome. All right, let us have an example. I'm sure those who are have you guys watched the approach? I think let me discuss the approach with an example so that we can call it a night. Let me give an example, then we discuss the approach to ethics questions, how you must present your answers. And I'm sure those who have already watched the video, the approach is very okay. And so we can be able to attempt the questions. Okay, let me get a question here. Okay, be this one. Okay, let me see. Yes, please. Any question?
Yes. Mine is on the. You had said that unlike the other normal questions where we state, apply, and conclude, for ethics, we don't follow that format. I just don't know how best can we lay out as we're applying on the scenario.
Yes, who can answer that question? Those who have watched the video? Anyone? Raymond, how do you approach ethics questions?
I feel like we explain the relevant accounting standard, what the standard says.
Perfect.
Then we talk of the threats that has come into place, and then we say what should be done, discuss what should be done, like the relevant actions for the what, for the threat,
Okay.
or for the breach of the ethics.
Perfect. Well said. So, Joseph, when it comes to ethics questions, we start with explaining the relevant accounting principles that have been breached. Okay? Then after that,
Yes.
we identify which principles, okay, are involved. Is it integrity? Is it professional competence? You even give examples from the scenario. What makes you think that is professional competence, right? Then after that, we have to consider the threats to objectivity. Is there any self-interest? Is it self-review? Is it confidentiality? You discuss the threats that are within the scenario. Okay? Then lastly, you discuss the actions that should be taken. Okay, approach, let me give it to you here. We've said, explain the relevant accounting principles breached. Then 2, you have to discuss, explain, and of course this should be explain and apply. You say according to IAS this should be done. However, in the scenario this was done. Explain and apply the principles reached in the scenario. Okay, then after that, number 3, we have to provide or give. Let me use the same statement, explain and apply the threats, objectivity involved. Then we can suggest actions to be taken to handle the situation. This can be, and by the way, with this now, we have suggested options that you can use. You can discuss with those charged with governance, okay. You can seek advice from SCCA, seek advice from SCCA, or it can be legal advice. Then always when you're presenting your answers, resignation should be the last one. Resignation. But in between here, okay, discuss with those charged with governance. In between here, you can even discuss the issue with the implicated person. What is the example here? If it is a finance director, and I've told you that in the exam, the finance director is an SCCA, you tell them that, you know what, you are a member of the SCCA, and the IESBA code requires you to be objective. So that is how you discuss and advise the person who is at the wrong side of the road, so that you tell them what they should do and how they are expected to behave as professional accountants. So Joseph, is this okay?
Yes, very okay.
And with practice, yes, please.
They have given those ones that discuss with those charged with governance, like discuss the issue with the person, like seek advice. Are we supposed to include all that, or is that supposed to get only one and explain it?
Okay. You don't even just have to do this. You read the question and see which of them is appropriate, and then you say the accountant should discuss the issue with management, or the accountant should discuss the issue with the finance director and show them the repercussions of not following the accounting standards. You get it? Or you can say the accountant should show the finance director that not doing this shall bring legal or financial implications to the company. That is, you're trying to interact, or you're trying to give advice that this person can put in place so that they can reduce on the threats. Does it make sense?
Yes.
So let us not just have these as cast on the stone. You can be as practical as possible in your advice. Okay, I'm supposed to, let me finish that question that I've just given. Let me see here. What I have. Okay, so that was the approach. But
Maybe lastly, do they
yes, Joseph.
like pick as it being
I can't hear you.
a 5-1 is that we have to identify it, and then what about now?
Please go ahead.
What about now?
Joseph? Joseph, you can speak.
Yes, what I was saying, do they pick one violation to the one of the fundamental principles? Yes, I was talking. I don't know if you can hear now.
We can hear you. please go ahead. If we can hear you. Using poor network. Okay, I'm trying to finish up the question so that we can dissect it, and then you guys can try to answer it in your free time. This is impairment, losses on owned assets, included within. Yes, please.
I was requesting, is it possible maybe like if we get maybe one ethical issue, okay, in this case that you've given, and you show us how you would formulate like maybe like one of them so that like people can know, can all know how to phrase the point.
You guys don't want to watch the lectures, that's the problem. Am I wrong? But we shall draft an answer, don't worry. We shall draft one, We shall draft one, and I'll show you how you should go about it, the way I've been doing. We shall draft one, don't worry. Let me first finish up with this question. I know time is moved. Okay. Required. Discuss the accounting treatment which RAMCO should adopt to address each of the issues above the consolidated financial statements. Okay, then discuss the ethical issues arising from the scenario, including any actions which RAMCO and okay, which RAMCO and the accountant should undertake. Right. I want us to mostly this is how your question 2 will appear, and as I told you, it is always 5 to 10 marks, the ethics part. So these are 7 marks, and these 7 marks, they will give you 2 marks for professional marks. We said this paper has 4 professional marks, 2 for question 2, 2 for question 4. So these, they will give you now professional marks, which are 2. depending on how you have applied and answered the what? The question. But always there will be a question on accounting treatments. That is, you must know your standards so that you can guide and give advice to what? To management. So first part is on accounting treatment. So there are issues that we have to read and see how they should be treated. And then the second part is ethical issues. And with ethical issues, now for this question, where the accounting treatment has been tested in part A, it means that this is already sober. This is already done under part A. Now you start with the principles, the threats, and then the actions. And in your questions, they will not always tell you that including any actions. No, in some questions, this is going to be silent. So even if it is silent, you should always give the action that the people involved should take to minimize the ethical challenges. Okay, so we can probably go through this. Otherwise, can I just give you it? Can I just share this? You read, try, so that next time we meet on Saturday, we draft a good answer. Does it make sense?
Yes, it does.
Yes,
Yes.
I share this question. You guys try out.
Yes, it does.
So next time we come, I sit and we draft a very good answer so that you guys can know the flow of the questions. All right, since we've all accepted that we share this question, let me do that. On Saturday, I know we have we have standards to cover, but we shall first start with drafting answers to ethics questions. Then after that, I can go through the other standards. All right, allow me wish you a good night, and I'm going to be sharing this example immediately. Okay, any question? Okay, I think no question, so